The International Monetary Fund (IMF) has projected that Nigeria's public external debt will rise from $51.9 billion in 2025 to $72.6 billion by 2027, representing an increase of nearly 40% within 2 years. In its 2026 Article 4 consultation report, the IMF warned that spending pressures linked to rising poverty, food insecurity, and the 2027 election cycle could widen fiscal deficits and increase the government's borrowing needs. The fund also projected Nigeria's total external debt, including both public and private obligations, to increase from $109.3 billion in 2025 to $132 billion by 2027. The IMF expressed concern over the federal government's proposed $5 billion total return swap financing arrangement, saying such structures are often opaque and carry significant risks, including potential margin calls if the naira depreciates or underlying assets lose value. It suggested that Nigeria could instead explore more transparent financing options, including Eurobond issuances and concessional loans. Despite the projected rise in debt, the fund maintained that Nigeria's sovereign debt risk remains moderate, citing recent reforms that have strengthened macroeconomic stability and improved resilience to external shocks. However, it urged authorities to sustain revenue mobilization funds, improve fiscal transparency, and avoid off-budget spending to preserve debt sustainability. The IMF also forecast Nigeria's economy to grow by 4.1% in 2026 and 4.3% in 2027, while recommending a broadly neutral fiscal stance and continued reforms to support growth, reduce inflation, and protect vulnerable households.